Hello, in this video, I'll help get you started on the Chapter 4 homework. Chapter 4 has 3 exercises that test you on the first 3 steps of the 9-step accounting cycle. First, you'll analyze the transaction for Castillo Shipping Service in Exercise 1 and determine the debits and credits for each of the 10 business transactions. In Exercise 2 and 3, you'll prepare the general journal and post these 10 transactions. As a reminder, to analyze business transactions, we use the 3-step process for determining debits and credits. In Step 1, we ask ourselves what accounts increased or decreased, then, in Step 2, we determine the account types for the accounts we identified in Step 1, and finally, in Step 3, we use the dealer mnemonic to figure out the debit and credit for the business transaction. Please watch the lecture videos about learning debits and credits to refresh your knowledge about this 3-step process. Let's start with Exercise 1 and analyze the first 2 transactions together. On March 1st, the owner made an additional investment of $50,400 in cash. Please remember that all business transactions have at least 2 parts, 1 debit and 1 credit. In Step 1 of our 3-step process, we determine what accounts increased or decreased. In this transaction, the business now has more cash. So, cash increased. The business also now owes more money to the owner. So, money owed to the owner increased. In Step 2, let's figure out the account types for cash and money owed to the owner. Cash is an asset and money owed to the owner is part of owner's equity. In Step 3, we can now determine what account to debit and what account to credit. First, cash increased, and cash is an asset. According to the dealer mnemonic, assets are debited when they increase. So, since the cash increased, we need to debit cash. Next, we look at the second part of the transaction. We determine that the money owed to the owner increased, and that money owed to the owner is part of owner's equity. And, the dealer mnemonic tells us that owner's equity is credited when it increases. So, since owner's equity increased, we need to credit a special owner's equity account, called capital, that is used to track money that the owner invested in the business. Now, we are ready to enter our answer into the form. Debit cash and credit capital. Now, let's look at the second transaction which states that the business purchased supplies for $5,050 on credit. So, in Step 1 of the 3-step process for determining debits and credits, we determine that the supplies account increased, and the money owed to the vendor increased as well. Let's now look at the second step. We need to figure out what type of accounts, supplies, and money owed to vendors are. The supplies account is an asset account and money owed to vendors is a liability. Next, the dealer mnemonic tells us that assets increase with debits. That means that we need to debit the supplies account. The dealer mnemonic also tells us that liabilities increase with credits. So, that means that we need to credit the liability account, accounts payable where we record monies owed to vendors. And, we are ready to enter the transaction into the form. Debit account 121 supplies and credit account 202 accounts payable. In Exercise 2, we now simply fill in the information from Exercise 1. So, for instance, for the first transaction where the owner made an additional investment of $50,400 in cash, we determined that we need to debit cash and credit capital. So, now we write this transaction into the general journal. On the first line of the general journal, we choose the account 101 cash from the drop-down filter in the description column and enter the amount of $50,400 into the debit column. On the next line, we choose the 301 Angie Castillo capital account and enter the amount of $50,400 into the credit column. For the second transaction, where the company purchased supplies for $5,050 on credit, we determined that we need to debit the supplies account and credit the accounts payable account. Let's do that now. On the first line of the general journal, we choose 121 supplies from the drop-down filter in the description column and the amount of $5,050 into the debit column. On the next line, we choose the 202 accounts payable account and enter the amount of $5,050 into the credit column. In Exercise 3, we are now ready to post the transactions to the general ledger. Let's start with Transaction 1 where the owner contributed additional funds of $50,400 in cash. We analyzed the transaction in Exercise 1 and determined that we needed to debit cash and credit capital. In exercise 2, we recorded the general journal and debited account 101 cash and credited account 301 Angie Castillo, capital for $50,400. Now, we will manually post this transaction to these two accounts. We start with the cash account and enter the date of March 1st into the date column and the amount of $50,400 into the debit column. The balance in the account will be calculated automatically. We move on to the next account, 301 Angie Castillo, capital, and enter the date into the date column and the amount of $50,400 into the credit column. Let's also post the second transaction. We analyzed the transaction in exercise 1 and determined that we needed to debit supplies and credit accounts payable. In exercise 2, we recorded the general journal and debited account 121 supplies and credited account 201 accounts payable for $5,050. Now, we will manually post this transaction to these two accounts. We start with the supplies account and enter the date of March 2nd into the date column and the amount of $5,050 into the debit column. The balance in the account will be calculated automatically. We move on to the next account, 202 accounts payable, and enter the date into the date column and the amount of $5,050 into the credit column. I hope this overview of the Chapter 4 homework was helpful. Please don't hesitate to reach out if you have any questions.